Assalamualaikum and hi everyone. Our group will be present about Aeon company. Aeon is one of the leading retail and shopping mall operator in Malaysia. The company was incorporated in 1984 and its headquarters is located in Kuala Lumpur. Previously, the company was known as Jaya Jasco Store Berhad before it rebranded to Aeon Co. and Berhad in 2004 to align with its Japanese parent company Aeon Co. Ltd. For the business model, Aeon used an integrated retail and property model. The company earns revenue mainly from retail sales, which include product and services, as well as rental income from mall tenants. This business model helped the company maintain more stable earnings, especially when consumer spending fluctuates. In terms of financial performance, Aeon recorded annual revenue of around 4.2 to 4.3 billion. The company also operates in a highly competitive market but still managed to achieve steady and moderate growth. FAR570 Interim Financial Reporting is a financial reporting standard that governs how companies prepare interim financial statements. This report covers periods shorter than a full financial year, such as quarterly or half-yearly reports. It does not require full financial statement but allows condensed report. It ensures timely and relevant financial information for users such as creditor and investor. It focuses on recognition and measurement principle consistent with annual financial statement. Minimum content requirement. The goal is to help users assess financial performance and cash flow and financial position between annual reporting periods. FAR 134 require company to apply the same accounting policies used in their annual report. The results should be measured on a year-to-date basis to maintain consistency. It also requires disclosure of any significant event or transaction that occur after the last annual report, so users are aware of important changes affecting the company.
Firstly, significant event is recurrent related party transactions or RRPT. These transactions involve Aeon dealing with related companies in activities such as purchase of goods rental payment, and management services. These transactions are important because they directly affect Aeon's revenue. Financial reporting material and recurring transactions must be disclosed to ensure transparency and fairness to users of financial performance or financial statements. This helps investors and stakeholders understand whether the transactions may influence the company's financial performance. The second significant event is Aeon expansions of new stores and shopping malls. This expansion is significant because it increases non-current assets such as property, land and equipment. It reduces cash flow due to high capital expenditure, and it supports future revenue growth and long-term business performance. According to MFRS 134, these investments are important disclosure because they affect both current and future financial performance. Next, I will explain the interim reporting period based on the interim report of Aeon Co. Berhad. First, Aeon financial years ends on 31 December and its interim reports are prepared quarterly and are unaudited. Each interim report includes the current quarter results, the year-to-date cumulative result, and comparative figures from the previous year. Okay, so I will explain about types of period. Quarterly period. Current interim period is 1 April until 13 June 2024. Comparative interim period 1 April until 13 June 2023. And then year-to-date period is for current interim period is 1 January until 13 June 2024. And comparative interim period is 1 January until 30 June 2023. So this comparison is important because it allows users of financial statements to evaluate the company's performance over time and identify trends or changes between the periods. In conclusion, both significance are important because they affect the Aeon's financial position and performance and must be disclosed for transparency. In addition, Aeon's interim report presents both current and comparative reporting periods on a quarterly and cumulative basis to provide consistency and better analysis for users of financial statements.
Today, I would like to explain briefly about MFRS 8, Operating Segment. MFRS 8 requires companies to report financial information based on their internal management structure. This means financial reporting is prepared according to how management views and manage the business. MFRS 8 use a management approach where segment reporting follow the way the CODM review business performance and make strategic decisions. An operating segment refers to a business unit that earns revenue, incur expenses, and is regularly reviewed by the CODM. For example, a company may separate its retail division, property division, or financial services division into different operating segments. The main purpose of MFRS 8 is to improve transparency and make financial report more useful for decision making. It's helped investors understand which business segment perform well, what risks exist, and where profit are generated. Moving to CODM, the chief operating decision maker is the person or group responsible for allocating resources to business segment and evaluating segment performance. It is important to understand that CODM is a function, not a job title. This means the CODM can be a CEO, managing director, or board of director, depending on the company management structure. For example, in Aeon company and Berhad, example of CODM include Mr. Sugutoshi Seko, the managing director who oversees daily operation and business decision, and Datuk Iskandar Sarudin, chairman of the board of director who helps guide strategic decision at the board level.
MFRS 8 mainly presents segment information in two ways depending on how business is analyzed. First, business segment reporting. Business segment reporting is group financial information based on different product or service offer. Group's financial informations based on different business activities such as product lines or service divisions. For example, a company may separate segments into retailing, manufacturing, and service. Help users identify which segment generate the most revenue and profit, compare performance between different business units, and understand which areas are most efficient and profitable. Second business segment is geographical segment. Geographical segment reporting focus on where the company operates. It shows financial performance based on different country or region. For example, Malaysia, Asia, Europe. It allows users to evaluate performance across different locations, understand a project to economic, political, and market risk in each region. For example, higher profit in one country may indicate strong demand. According to the annual reports, Aeon.co have two main business segments, retailing operation and property management service. The segment revenue disclosure shows the retail contribute over 3.5 billion, while property management contribute over 787 million in 2025. Since Aeon.co not disclose geographical segment because its operations are mainly concentrated in Malaysia, now I will provide Sydney geographical segment of Ajinomoto Company. 2025, Malaysia contribute the higher revenue at approximately RM388.18 million, followed by Middle East at about RM151.10 million and other Asian countries at around RM134.95 million. The total revenue for the year is about RM648.50 million. Now, we are going to benefit. First, segmental reporting help users evaluate each business segment separately instead of looking at the company as a whole. This gives a clearer and more details understanding of how each part of the business is performing. For example, Aeon.co Berhad has a property management segment that is very stable and profitable. It is strong, it has long-term tenancy agreements, high and readable occupancy rates. This ensures consistent rental income. Without segmental reporting, it's very difficult because trade growth trends evaluate the efficiency of each segment. The second benefit is segmental reporting help users in forecasting and assessing risk. Users to identify which segments are strong, stable, risky. Why is it important? Because this gives a clearer understanding of how each segment contribute to the overall performance of the company. Crucial for this part, so investors and managers can make better decisions based on which segment perform well and poorly. Or the conclusion is segmental reporting is important because it improves business evaluation and helps in better forecasting and risk assessment.